All right. Good afternoon, everybody. We're about 10 minutes until we get started. Just wanted to hop on, let you know you're in the right place. We're going to be doing something a little bit different this week. We're actually going to be streaming this live on YouTube. So for those of you joining us on YouTube, welcome as well. Those of you watch this in a recording, what we're going to be doing is going through our live stealth trades training session. And we do these live every single Monday at 3 o'clock Eastern time. And we go through the live markets. We look at the biggest opportunities we see for this week. I'm also going to break down the stealth trades methodology and show you in depth what we look for in stocks, exactly where we plan to buy, we plan to sell, and how we take a low risk, high reward approach to trading stocks in the market. So welcome, everyone. Once again, we're going to get started in just about 10 minutes. So hold tight and we'll be getting going shortly. All right, you should all be seeing my screen again. We got about 5 minutes till we get started. I see some more people trickling in. I don't want to jump on here too early, but of course, welcome to everyone here. We're doing our live stealth trade session, and we're doing something a little bit different this week. We're actually streaming this live to YouTube. Now, I know you guys that are here as a stealth trade members paid for this. So it's not something we do often, but we want to just give a little preview this week of what we're going to be, what we do here in our stealth training session, which includes going over the entire market, looking at our top 3 setups for the week, reviewing our open trades, and we're going to break down the entire stealth trades methodology, tell people how stocks actually work, go through the 4 cycles, the 4 stages of the stock cycle, what to look for, and how to find stocks with the greatest probability of going up and also coming in with the lowest possible risk. So we're going to start in just about 4 minutes now. If you guys would type something in the chat there for me, let me know you can see the screen and hear me okay. YouTube, same to you guys. I'm watching the comments both here in our live Zoom session as well as over on YouTube, and you will get this thing going in just a moment. All right, perfect. And thank you, Russ. I appreciate that. Gary from Puerto Vallarta. Wow, there's worse places to be, Gary. Now, we are coming in here on a terrible day in the stock markets. If you look at the indexes, they are just bleeding. Look at that blood red we see over here on the right side of the screen. The S&P down 2.25%. The NASDAQ down almost 3% on the day. Look at the NASDAQ. We're down 375 points. Dow down 700 points on the day. Yeah, a lot of red out there. Not a pretty day for us as stock traders, but that is okay. These things are going to happen. Stocks don't go just straight up. We know that. And we have to ebb and flow with the market. Doesn't mean there's not opportunity out there. So we're going to be reviewing the big stocks we're watching for the week, and more importantly, we're going to walk through the entire stealth trades approach so people understand the best way to buy stocks and buy them with the lowest possible risk. Okay, about 2 minutes till we begin. Really quickly, type in there, give me your name and where you're at. I'm curious where everyone's coming from here today. And Timji, I appreciate that. It means a lot. Thanks for the nice comment. But let me know where you guys are coming from. No one is probably anywhere near as great as Gary over there in Puerto Vallarta. So everybody tell Gary how much we hate him for being in such a beautiful location today. But just kidding with you, Gary. Russ in Benton, Arkansas. Okay. Daphne from the Bronx. Okay. All right. I hear you, Daphne. David coming to us from Nevada. And Cool Dip in Australia. Fantastic. Somebody from Canada. That's wonderful. Oh, thank you, Frank. I appreciate that. Chris from San Fernando, California. You are from Finland. Wow, fantastic. Never been to Finland. Mazine, we've got on YouTube here from Iraq. That's wonderful. Carol from Galveston, Texas. Lots of rain. I've been to Galveston. I just got back from Austin about a week and a half ago. My younger brother lives out there, so I was out there doing some work. Tim coming to us from Iowa. So we got a pretty good spread here. Folks from all over, not just the country, but the globe. Ned in Houston. I think Mazine over there in Iraq, you might be winning furthest from me. Well, welcome. I appreciate the kind words. Let's go ahead and begin now. For everyone who's new, really quickly, type in here if you are on YouTube or on Zoom. If you are brand new to Traders Agency, this is your either first stealth trades class, maybe your second. How many of you are fairly new? One of you brand new. Russ, you're first today. Welcome. Perfect. Who else is new here? A couple others coming in. YouTube. Okay. Ed from Lithuania. Cody, you're in Hot Springs. Daphne, your second time. Perfect. Frank, you're new. Jill, first time. All right. Well, that's wonderful. I'm glad you guys are here. I think you made a wonderful decision. I'm going to make you a promise right here. Okay. 30 minutes from now, 30 minutes from right now, you will have a better understanding of the stock market than you ever have in your life. You will have a better grasp on what moves stocks, when to buy them, and just as importantly, when to sell them. You're going to learn something about the stock market that less than 1% of investors have any ideas going on. It's not a conspiracy theory. It's not a double super secret indicator. What I'm going to show you, I will back up with evidence of why it happens. And it really is common sense, but most people do not realize the underpinnings of what moves stocks and what moves the market. So I want to start with this. This is the 4 stages of the stock market. And not a lot of people realize this, but stocks move in stages. And this is a weekly chart. So each one of these bars, the green and red bars, represents 1 week of trading activity. Now, stocks, whether we're talking about Apple and Amazon and Google, or we're talking about, Bose Weed Eater Conglomerate LLC, they all move in a very similar cycle, and they go through these 4 stages. Now, sometimes these stages take place, as it did here, in about a 18-month, 2-year period. Sometimes these 4 stages may take 7 or 8 years to play out. But when you're done, you're going to be able to identify this. Now, I've broken this down for you guys today with some explanations of what these stages are. And you don't need to be able to recite this. There's not going to be a test at the end. But I want you to understand why we only buy stocks in this green box in stage 2. We only buy them when they're in stage 2. So let's just talk about what happens. And again, this process repeats over and over with every single stock out there. Okay, any growth stock, I should say, anything you want to actually own. So the first stage is stage 1. It's known as the accumulation phase. Now, this one is very short because this is Roku. After COVID came, it was the big dip there. But if it hadn't been for that COVID dip, this thing would have been really all the way from about August of 2019 to August of 2020. And stage 1 can last 6 months, a year. You'll often see stocks in stage 1 for several years. And it's really just a nothing time. Stocks are pretty much chopping back and forth. They're not really going anywhere. Generally, it's after a stock's been beaten down a long downtrend. Look at like a Peloton or a Zoom, something today. It's just been absolutely obliterated over the last year or so. They get down to become a value stock. And this is where the big institutions begin building up positions in the stock. Now, one very important point I forgot to make here is understanding what moves stock prices. If all of us here in this room, we all took every single net worth dollar we had, all put them together and all bought Apple stock at the same time, exact time, millions of dollars, we might move that stock 5 cents. Okay. When Goldman Sachs and Merrill and Fidelity's mutual funds and the Notre Dame Endowment Fund and the New York City Pension Fund, all these big guys, when they move into stocks, they move them. It's the big fish that move stocks. It's simply a game of who's got the deepest pocket. So if there's more people buying a stock and more money going into it, it's going to go up. If there's more people selling it and more money coming out, it's going to go down. Basic supply and demand. So we know what moves stock prices. So stage 1, institutions begin kind of building positions very quietly. All right. If a big institution, a big fund wants to build let's say they want to own $500 million worth of Roku, they can't just go to E-Trade and click buy and get $500 million. The stock would quadruple like immediately. It takes them weeks and usually months to build that position. For example, Warren Buffett has been building a position in Occidental Petroleum for about 5 months now. And he just got approved on Friday to buy more. His position in Apple's taken him years to build. So they do this quietly. This is a period of 5, 6, 7, 8, 12, 14, 16 weeks, 3, 4 months in here. Just building a position, nothing really happening. Stage 2 is where things get exciting. All right, this is the markup phase. This is where the stock begins to take out. Typically, stocks will break out, usually on an increase in volume. See how that volume just spiked right here on the way out? This is when all the other large buyers start to go in. The trend traders jump on board. The momentum traders jump on board. Something has generally happened to put a stock into stage 2. If it's Apple, maybe sales of their iPods or AirPods are much higher than expected. If it's Netflix, maybe subscriber growth, they grew 10% instead of 4%. Or you look at something like Crocs, like when they first came out, it's an exciting new shoe, and it says everyone's getting them, they're buying. There's something exciting going on. Usually sales and earnings are growing at a rapid pace. And so as these institutions have built their positions, now it's starting to run away and now just piling money. They're just grabbing it. And everyone's kind of piling in. So demand has picked up for this stock. Generally, there's no big retracements. By retracements, I just mean little pullbacks along the way. It's pretty steady up, as you can see here in stage 2. That's because there's high demand for the stock. Anytime the stock comes back 5% or 8% or 10%, people are going, pullback, buy. And all that buying is supporting the stock price and accelerating it into stage two. So I'm going to tell you all this just to tell you we only buy stocks in stage two. And if you look at the chart, I'll tell you, you can own it from the beginning to end of any box on this chart. Which one are you going to pick? Green one, 8 days out of 7, right? So that's what's going on here. It's a hot stock. It's being accumulated. The price is getting marked up. Then stage three comes. Stage three is a distribution phase, and you'll normally see a warning sign for stage three. It'll usually be something like the biggest down week on volume. So if you look up here, look at this, 1 week is down 15%. Next week is down 10%. So this stock, which ran from 150 to 480 in about 6 months' time, suddenly falls 30%, 25, 30% in 2 weeks. Okay, this is your warning. What this is telling you is that the institutions, the funds, the big players, the folks with billions that are moving the stock price are getting out. The party is over. They are running for the exits. They built big positions back here at 100, 120, 140. Maybe they added some up on the way up. Well, it's not a gain until you sell. We've all been there. It's paper profits until you cash it. So institutions, like I said, it takes them a long time to build a position. They tend to dump it pretty quickly. They sell when they can, not when they want to. They need the liquidity. They need people buying up the stock. And so this happens. Now, stage three is an account killer. And this is where I see more people screw this up than anyone else. What happens to people in stage two? Let's go real time. You're watching a stock. Your friends are getting rich. It's surging, surging, surging. You didn't buy it at 100, didn't buy it at 200, 304. Suddenly, it falls from 480 to 330. What does the Reddit crowd do here? What do the morons who give advice on Instagram tell you to do here? What do they say? Buy the dip, right? Buy the dip. It's on sale. It's a discount. But we know better, and you're going to know better in the next 10 minutes, because what you've seen by this big decline here, this big sell-off from 480 down to 280, is that the institutions are leaving. This is not a blip. This is the beginning of the end. Exactly. Rob said more like bye-bye. Now, this is why it really kills accounts. When you see this happen, it comes down, they buy it, it goes up to like, I'm brilliant. I'm up 50, 60% in a couple of months here. I'm smart. I bought the dip. But it's coming down. Now, sometimes this doesn't even happen. In fact, a lot of the times it doesn't. In this case, sold off. There's a lot of interest. There's the buy the dippers who bought it back up, but there's really there's no sustained momentum, and it rolls back over. Sometimes that doesn't even happen. Sometimes it's a flash in the pan, a little uptick, and then it's just headed straight to the ground. But stage three is where these institutions are exiting. They're unwinding their positions. They're taking profits. And if you're smart, if you learn to see this stuff, which you will, you'll know the party is over. In fact, you're going to begin looking to short sell this stock or buy a put against it. Or at the very least, just avoid it like the plague. You don't want to be caught in this nastiness, because then stage four rolls around. Stage four is the markdown phase. The institutions are out. All the big players who bought the stock and drove the price up and quadrupled the stock, they're gone. They're on to the next one. So the only people holding the bag up here are us, the retail investors, mom and pop. I don't care if you've got 10,000 in your account or 10 million. We're still small fries. And those buy the dippers, it dips back. Okay, I'm going to buy some more. It's break even. Eventually hit their uncle point. Because over here in stage two, institutions were constantly buying the stock. They were supporting the price. Small dips were being bought and the stock pushed higher. Well, that's no longer going on. They're out of the stock. And so with no support, as it begins to break down, all these diamond hands guys suddenly aren't so diamond handed. They're going to hold it forever to the moon, 450, then 350, then 250, then 150, then $70 a share. So people hit their uncle points at different places, but nonetheless, they're hitting them and the stock's getting eviscerated because there's no buying. There's no institutions backing it up, and it's going to fall until it gets to a price low enough to entice new investors. Now, people get into the mistake. They go, well, it's a market leading company. It's a Netflix or it's Apple. It can't fall so far. Or worse, the worst thing I hear is, oh, Ross, it's down, it's down 70%. How much lower can it go? Anytime you buy, I don't care if you buy it at $300 a share or 3 cents a share. Here's how low it can go: 100%. Okay. If somebody bought it up here at $4.50, it falls all the way down here to $2.50, and you're like, what a sucker. I'm the smart one. I got it on sale. You're down 72%. He's down 82%. You bought it $200 cheaper. Are you really going to brag? You're down 82%. I'm only down 72. No, you both got eviscerated. You both own a dog stock. So what I want you to do is retrain your brain to stop looking at the stock chart and go, oh, it used to be there, now it's here. That's cheap. That's not the case. That's not how this game is played. Any stock that's going down is bad. Let me repeat that. Any stock that is going down is bad. Any company, any stock can be a great investment at one price and at one point in its life, and a terrible investment at another price, at another point in its life. This cycle will repeat itself. And to show you what I mean, let's look at, what was the one I mentioned earlier? Crocs. Let's look at Crocs. This was when it initially went public back in 2006. And I'm on a daily chart now, so I can go to a weekly and make it a little cleaner for you. Now, you see the stages here. Stage one, shot, nothing happened. And suddenly, breakout sales, big numbers. Look at the volume spike up here as it begins to shoot higher. Notice the trend up, very minimal pullbacks. And then boom, look at this 1 week. Look at this 1 week right here. In 1 week, the stock falls 31%. Look at the volume down here. It just shows how many shares trade. Look at that huge volume. Normally in a week, the stock sees 27 million shares trade. We saw 5 times the average volume, 127 million, 124 million shares trade on the biggest down week in the history of this company, and at least anywhere since stage 2. That was your warning. Now we looked at Roku, and what did it do in stage 3? It pulled down, it gave you a little hope, and then it went down. It doesn't always happen. So don't be playing stage 3s thinking you'll get the pop. Sometimes it goes down, nobody's buying, and then just, to nothing, from $75 a share to $1 a share. And I said this process repeats itself, and it does. Goes on and over and over again. I'll just show you the most recent one. Here we are back in 2020. Coming out of COVID, stage 1, boom, big stage 2 uptrend. Goes from $10, $20 a share, breaks out at 40, from 40 to 160. So just waiting for the stage 2. Stock rises 282% in a year. It's fantastic. And then big selling week, big down week, gets really choppy. See here, it falls down, 20% in 2 weeks. Chops up, boom, another big sell-off. This is your warning. Institutions are getting out. And sure enough, from December to last month, the stock has fallen by about 75%. Everybody understand this? Georgie, Cody, Kevin, Sean, welcome. You guys, I see you over here on YouTube. Got a couple questions in the Zoom room. Yeah, Rob says, nothing like holding a stock in a company that goes bankrupt. Like I say, it doesn't matter if you buy it at $80 a share or $8. If it goes to 0, you lose the same. Robert, does it matter what percent of the total shares the institution owns? It does not. By the way, Robert, those numbers that tell us how much shares the institution owns are generally lagging. They're reported once a quarter and like 45 days after that. So by the time they're all out, or once we see it, they've been out. So there's no need to go that in depth with it. We're just looking at the simple price action. Okay. So I tell you all this, not to try to make you a master, but I just try to tell you, we only buy in stage 2. What other box performed well? What point during stage 2 in this green box could you have bought the stock and lost money? Unless you just got the absolute high and rolled over. That's going to happen every once in a while. But the odds you were going to make money buying in stage 2 were very, very good. I tell people, even at first, when you suck at this, when your timing is really poor and you don't know what you're doing, just sticking to stocks in stage 2 is going to put the odds greatly in your favor. You have the momentum of the market. It is riding its 50-day moving average. Institutions are buying this thing up. Any little dip is bought and pushed higher. You don't have to be a rocket science. Just get in stocks in strong stage 2s and they should rally. You try to buy a stock in stage 4, it's going to be a little tougher. You're going to have a tough go at it. Maybe you're clever enough to come in and buy right here on the dip and sell it right here and make 10, 12%, something like that. Odds are you're just going to lose money. And what most people try to do is buy here. Let me go ahead and save you a lot of time. I've been doing this for over 15 years. It's not possible. Buying the lows, timing the lows ain't happening. It's just not. A couple of times in my life, I've sold here or bought here, and I'll be the first one to tell you it was pure, straight, unadulterated luck. Okay? Pure luck. We're not going to happen. And the other thing is, we don't even need a stage 2. We don't need to buy it here and sell it there. In fact, I'm not even trying to. I'm after quick, fast wins. Okay? Do I want to buy the stock here? Stage 3, stage 4, hold it for 6 months, 5 years, hope to God it comes back one day? Or do I just want to buy it in here, sell it in here, make a nice little, 50% in a couple months, which is easier? So do we all understand? We're all on the same page. We want to buy stocks in stage 2. Now, Daphne has a really good question. It says, it seems tricky to see when stage 3 because it is still going up with volume. And yes, and this one may not be perfect. Let me move this box off here for you. But what I wanted you to focus on is this candle right here. See what's down big right to that week. So in 2 weeks, the stock falls, let's see, about 17, 18%. And even if you really want to ignore that one, you really would have been okay. But when you get over here, you get 1 week down, it's down 4%, down 2, down 3, then boom, down 15% in a single week. Look at the volume when it breaks down here. Look at the big, heavy selling volume. You just got to notice when we get that, because the big selling volume is what's telling you the institutions are getting out. Now, they have all kinds of tricks. Believe me, I was a vice president at JP Morgan. I've seen all the tricks in person. They have stocks they're trying to get out of for their big fat money clients. They recommend them as buys to their smaller clients. They'll upgrade a stock trying to get it to push higher so they can sell it. There's all kinds of dirty tricks they play, but they really can't hide is their trading volume. So when you see big volume in a move like here, big volume, big volume, big volume, that's institutional buying. There's no other way around it, other than like the crazy rare exception where you get all the Reddit crowd together and everybody piles into AMC or something. That's a fluke thing. But 99 out of 100 stocks, it's institutions. The selling, same thing. Big selling, big selling, big selling, big selling. Institutions dumping the stock. So just watch for that. The biggest thing you want to look for, Daphne, is I look for its biggest down week or the highest volume and the price goes down that week. Anything that's abnormal to the run before. And obviously, the earlier in stage 2 you can buy, the better. But we go through all that just to tell you we only buy in stage 2. So let's go to the second part. Okay, let's get to the second part. We know where we're looking to buy in stage 2. Where exactly do we buy? Well, let's walk through that. So let's look at a couple stocks here. And I'm going to walk you through the stealth trade breakout strategy. Oops, I'm on a weekly chart. This is the setup we're looking for, something like this. Now, a quick note, by the way, I've seen a couple of questions asking, well, yeah, hindsight 2020, you're in stage 2, and you look at the chart. How do you know at the time? Here's my definition of a stage 2. Let's just zoom this out. Let's go to a weekly chart here. Here's what I need to see for stage 2. Got a very strict criteria, okay? This is just what I look for to tell me we're in stage 2. Couple things. Number one, $200-day moving average up for at least 1 month. Okay. All that means, let's turn this one off. The only line you're seeing, the red line is a 50-day moving average. Very simple, just simple moving average, 50 days. The white, simple moving average, 200 days. I need to see this going up for at least 1 month. So follow it here. Down, 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 flat, up. So right here, it's been going up for 1 month. Okay, that's rule number one. 200-day moving average up for at least 1 month. All right. Second rule. I need the 50-day above the 200-day. Not rocket science. I need red line above white line. Why? The red lines is my 50-day moving average, the short-term moving average. The white line is a 200-day, the longer-term moving average. So it's a short-term trend, long-term trend. I need short-term going up, long-term going to go up. It needs to be going up faster. So 50-day above 200. All right. 3. Need the stock above the 50-day. So 200 needs to be pointing up. I just need to see them stacked in that order. Stock, 50-day, 200. Makes sense? Stock above the 50, above the 200. All right. And then the only other thing I need to see is the stock at least 30% above its 52-week low. These are the 4 things that turn to stage 3. So the 4 things, excuse me. So over here, we're trending down, down, stage 4, trying to build a stage 1. And then, all right, we're waiting for stage 2. Let's see. 200 days started to turn up right here. 50 days above it. Stock price above that. How much are we off the lows? 277%. I'd say that's above 30. We're in stage 3 now. So right here, at this point in the chart is when we enter stage 2. So at this point, all I do is put this on my watch list. Okay, we got a stock in stage 2. I'm looking for a place to buy it. Am I trying to buy the low? No. Am I going to throw money at it blindly? No. I'm waiting for a low risk entry point. I want a place that says the odds are very high that the stock is about to explode up in price. And I want a place that I can risk very little. And I mean little. I mean 5, 6, 7, 8%. Those of you who've been with me for a while know this. I never risk more than 10% on a stock trade. And I want to repeat that. People think I'm lying. I never risk more than 10% on a stock trade. How many of you have taken tips and it's down 30, 40, 80%? What's the biggest loss you've had in a stock? I guarantee it's more than 10. Mine is not. You might think, oh, you're trading it too tight. No, I'm not. I'm going to show you how you can do this. And avoiding the big losses is the biggest key to having strong performance in the stock market, because you're not giving much back and you're not ever blowing up. You're suffering no big losses. So here's the setup I like to see. Let me go back to a daily chart. And this happened a couple of times along the way, but this was the best one. It was right in here. I want to see a setup that looks like this. The white line, I want to buy when the stock gets above that. That means I want to buy the stock right here, not a day, not a penny sooner than when it gets above that white line. And by doing that, look where we bought. This is a real trade from the Stealth Service, by the way, one of my weekly watch list ads. Stock rose 45% in 37 days. We didn't hold through all this. We were never underwater. We were profitable on day 1. We had the most rapid expansion in price. Look at this chart. Is there any, if you had to hold this thing for 1 month, name a better month to hold it? This one, this one, this one, or would it be this one? This is the best 1 month period in this entire move. And that's the place we owned it. Why? Because I'm a stock picking genius with a crystal ball? No. So we're following a systematic approach that you're about to learn right now. So let's walk through this and what we have here. Now, we talked about this earlier, how what moves stocks is people buying the stock more than people selling it, right? A lot of people buying it once, stock's going up. A lot of people selling it once it goes down. It's no different than the housing market. What happened after COVID? Not many houses were for sale. Everybody wanted to move. That means you got a lot of demand and very little supply. Not many people selling, a lot of people wanting to buy, prices went up. What's going on now? Opposite. Everybody's like, I got to cash in on this. They're all trying to dump their houses. Not as much demand now because interest rates have gone from 3.5 to 5.5. So you got a lot of supply, i.e. selling, and not much demand, i.e. buying, and housing prices are going down. It's no different with stocks. It's no different with cryptocurrency, with, Beanie Babies. I don't care. It's the same universal laws of supply and demand. So this is how it works. Now, somebody tell me, do stocks go straight up like this, or do they kind of move like that? Anyone of you who've been trading stocks for a while knows they kind of stair step their way up. Look at any chart, kind of stair steps its way up. So why does it happen? Why does it do it like that? Well, let's think about this from our point of view. Let me put yourself in these shoes. You bought defense stock back here at $12 a share. Okay. 6 months later, it's at $35. You've made 160% on your money in about 6 months. Real question. No tricks here. Just imagine what you do. What would you do? What would you do? You'd sell some. I would. I'd sell some. If I didn't sell all of it, at least sell half or a third or 2/3. Everyone else the same way. That's why stocks stair step their way up like that. It makes a move up. It's strong. You'll take some profits. Oops. Runs, take some profits. Runs some more, take some profits. Runs up, take some profits. That's why they make those moves up. Now, after a huge run like this, you eventually get a big selling move. And this was based on earnings, but the stock comes down from its peak 30%. Okay. That tells me there's people waiting to sell this stock. And a bunch of them sold the same time and it fell 30%. Now, if this stock is still in stage 2, if it's still in the markup phase, if institutions are still buying it, there's still heavy demand there, it should push back up to its highs. And it does. The stock runs right back up into those highs there, into that close. So after the first wave of sellers, you got people who wish they'd sold it at, 33, 35, saw it down to 25. They go, if it gets back up there again, I'm going to sell it. And they do. And they get up there and they sell. And the stock pulls back again. In this case, around 12%. Now, why did it pull back less this time than it had before? Because a bunch of the people already sold. They got out up here at the top. It runs back up to 34, 35. People, it's been there once, it's been there twice. It's the third time. I'm not letting this happen again. I'm going to sell some. And they do. And it pulls back. It runs up there a fourth time. Oh my goodness, the stock can't get above there. I'm going to sell some. You've also got people who got caught up in the hype. They bought here, they bought here, they bought here. They're trapped. When watch this thing underwater the entire time, they're like, dear God, just get me out at break even, and they sell it. So we're just going over the psyche of all the people who are in this thing. But I do this to illustrate the fact that we are working through those sellers. And each of these dips, for the most part, there's going to be a little variance. For the most part, they should get shallower and shallower as we go from left to right. And this last little dip in here, look at how tight it was. The last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trades, 2 weeks. Stock only pulls back 4%. This is a visual representation of the stock market working through supply, working through sell orders. It's showing if you want to sell, they sold it. There's a few selling here, a few less, a few less, a few less, until we've exhausted all of those sellers. This is when the stock price has the highest probability of going up higher and quickly is right there. Because if it gets above this line, and only if it gets above our line here, that tells us we've worked through all the sellers. The supply is gone. Now that those pesky sellers are out of the way, the stock should be able to rise very quickly with nothing holding it back. Because there's no more sellers holding the stock back. They're all out of the way. And so remember, sellers bring the stock down, buyers push it up with all the sellers sitting there. If I told you there's 1 million people trying to sell the stock at 36, it's going to take forever to get through there. Because every time it gets to 36, you're going to sell, 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 sell. Once we're down to the last person and he sells his, no more sellers. Anytime you buy, it's just going up. And this is how the stock can make a rapid acceleration out of that movement and to kind of add to it. If we get this nice big volume move, the big increase in demand, that's just icing on the cake. And that's when the stocks make these big, strong moves higher. Is this term consolidation? Yes, Daphne, same thing. Same thing. Consolidation, a lot of people think of consolidation as these like just purely sideways moves, and sometimes they are. But when we get this kind of consolidation where it tightens and tightens and tightens and tightens, that's textbook breakout moves. It's showing us working through all the sellers. Now, it does one other thing. By following this approach, it also limits your risk in a trade. So I want you to note something here. Let me take all this stuff off the chart. Let's follow the path this stock took, okay? Here it comes up, down. Oh, missed that. It's okay. Now, I want you to notice something. See how each of these lows were not violated on the next pullback. It came down here to 25. Comes up, next little pullback, and maybe I should have made it right in here. But next one is higher. That should be the maximum seller point. Shouldn't be it shouldn't sell back down to that far again. Next one, a little higher. Next pullback, a little higher. Next pullback, higher still. One more. So you see, it's just a series of higher lows. Now, why is this important? How does this decrease our risk? Well, if we buy this, wherever we buy the stock, let's just say we bought it, we were looking to buy it here. We'd want our stop below the most recent swing low, the last place it dove and came off of. So in that case, this would have been right here. Well, if we bought it here and we put our stop loss here, stop loss simply where you're going to sell the stock if it goes against you, what are you risking? You're risking 17%. Okay. So you let it coil up a little more. Gets up here, pulls back, gets up. All right, now you're going to buy it here. Where do you want your, because it's breaking out, where do you want your stop loss? Right here, right? The last little swing low where it shouldn't get below. All right, in this case, you're risking 10%. So 10% is better than 17, but it still could be lower. Look at the next one. Comes back again. Now it breaks out. Now you're buying it here. Okay. Where's your stop loss? It's right here. The last little swing low. How much are we risking? 4.5%. You're buying the stock. You're risking 4.5%. 4.5%. And the stock rises 46% over the next 5 weeks. You risk 4.5 to make 45. You're literally making 10 times what you risked on the stock. Now, assuming you sold it there, I know I'm not saying you're going to sell at the top. Okay. Let's say you caught half this move. Let's say you just caught half of it. You bought, you sold way early. You got out right here. You sold right there. You're kicking yourself because you're going higher, but it's fine. You made 25%, 2 or 3 weeks. What have you done? What have you really done when you look at it? You have risked, your risk was 4.5% on that trade. That's what you were, if you were wrong and went the other way, that's how much money you would lose. Okay. Your gain by just getting half the move, your gain was 25%. you made your risk to reward ratio is 1 to 5. Meaning for every dollar you risked, you made 5. By buying here, stop loss here, and selling here. So if you're making 5 times what you risked, actually a little bit more than 5 times, really 5.5, what does that mean you can do now? It means you can lose. You can be flat wrong 4 out of 5 times. You can lose 80% of your trades and you still make money. Let me repeat that. You can lose and be dead wrong on 80% of your trades and still make money. Not a lot, but you're not losing any. Now, imagine you just get them half right. You just get them half right. Half of them on 10 trades, you make 25% 5 times, you lose 4.5% 5 times. You got 125% in the gain column. You got 22% in the loss column. You've made 100% total returns on 10 trades. You get a good market, you're right 7 or 8 out of 10 times, you're going to make a fortune. People think it's all about the monster winners. Worse, think it's about a high hit rate. I want to be right 80% of the time. It doesn't matter. You want to scale in failure. You want to set yourself up in trades that have risking very little, potentially make a lot very quickly, and then you want to compound and roll these from one to the next, to the next, to the next, to the next. That's how you make money in the stock market. So 30 minutes ago, I told you you'd understand the market better than you ever have. Who's learned something the first 30 minutes here? Who's seeing things a little bit differently? Is this making sense? Russ, you have? Good. Cheryl? Yeah. Daphne? Good. Okay. Perfect. Everybody's saying it makes sense. It's not overly complicated. People like to make it overly complicated. I've got a relative strength line at the top of this chart, but I really don't even need that. Other than that, what am I looking at? Stock chart, 2 moving averages, and volume. That's it. But you got to use some damn common sense. That's where most people don't do it. They want the most complicated, crazy, super secret indicator, and most of that crap loses money, I'm telling you. What you're doing is identifying the strongest stocks, waiting till the enter stage 2, which is we know we have a super high probability of the stock advancing higher at that point. We wait till stage 2. We've got the greatest odds of making money. We buy, and we have a low risk breakout. So now what do we have? I mean, by buying here, we've got a stock well into stage 2 in a bull market. Odds are you just buy the damn thing anywhere and make money. But we're going to do it even tighter. We're going to risk 4.5% of our money because we're finding an ideal setup. This does 2 things for you. For one, it lowers the risk. It increases the odds of making good money, but it also lowers your holding period. Let's say I told you about the stock in May, or I told you I was in stage 2, and you just get excited and you bought right here at $32 a share. I bought way up here at 35. You bought in May, I bought in October. And we both sold somewhere near the high. Now you made 57%. It took you 6.5 months, and you were underwater, meaning your count showed a red down number for most of that time. In fact, 8 days after you bought it, you were down 25%. Maybe you would have held through this. I wouldn't have. I would have been long out. And honestly, if you're underwater, it's back to my profit. I might make some money. Nope, underwater. I'm up 2%. Psych. Nope. When it gets here, what are you doing? The hell with this piece of crap. I'm out. I'm taking my 10% and move. Thank God I made something. But even if you didn't, if you had the great awareness, what would you be? Guy ball back here makes 58% in 6.5 months. I waited to here. I make 45% in 1 month. What would you rather have? You want to make 55% in 6.5 months and pull your hair out? Or you want to make 45% in 1 month? What does that do? It gives you, one, you're in cash all these months. You're doing nothing. You're sleeping like a baby. You got no risk. But more importantly, when the stock's doing this, you're buying others. You're buying other stocks that are set up in this pattern. Again, we're just there for the good times. I always like to say we date stocks. We don't marry them. We're just there for the good times. As soon as we see something doesn't look great, we're gone. We just want them at their peak and they look really great. Going to have some fun. And then thank you very much. We're on our way. That sounds bad. I can say that I'm married now. We're only there for this period. There's no sense buying stocks. Listen, buy and hold is dead. Holding stock for 6 months to try to make money is dead. Taking a tip from some moron on social media is not a smart thing to do. By identifying stocks in stage 2, and then we go further. I go further, look at the strongest groups in the market. Right now, that's solar energy, it's retail supermarkets, it's medical stocks. And we find, we get one of these setups, and we buy. If you made me look at 100 stock charts right now, and I look at several every weekend, on 98 or 99 of the 100, I would say, there's no buy. But I don't care. I'm not trying to own 30, 50, 100 stocks. I never own more than 10 because I'm very picky. I'm only looking for really strong stocks. I scan for other things. We look at big earnings growth and sales growth and just some characteristics that the biggest winners have shown. But we're looking for stage 2 stocks in a textbook setup that show us we have a high probability the stock's about to make a quick advance higher. And we can risk very little to see that. If you made 50% when you're right, but you lose 50% when you're wrong, well, you're not doing any services and you're gonna lose money. But if you're losing 4 or 5% when you're wrong and you're making 20, 30, 40% when you're right, you're going to have a very, very good career in the stock market. Now, really quickly, for those of us joining here on YouTube, we got something new set up. I want you guys to try this out. If you are not a Stealth Trades member, we have a special offer to join at just $5. $5. And you can text to get the offer sent to you. So if you would, just text Ross, that's ROSS, to 74121 to get in on the special offer. We do these live sessions every single week. We're doing one here live on YouTube so you guys can see. I wanted to give everyone a look behind the curtain. Those of you live in my room, I appreciate y'all allowing us to do this and share our session with our friends over here on YouTube. But if you're interested in joining, it's just $5. It's live every week. And as you're about to see, we go through this setup. I'm going to show you my 3 favorite picks for the week, or 3 that look really good. We're also going to look at all of your stocks as well and kind of pick them apart and say, I might buy here, I might buy there. And for anyone who thinks it's a fluke, these are other previous trades we've recommended. Notice Coast CCB, same pattern. See it? ANDE. See the same pattern? This one actually came twice. Look at this. Tightening, tightening, tightening. What are we buying? Right here. Their stop loss. Right there. Risking $2 a share. Did the same thing over here. Tight, tight, tight. Nucor. These are just previous ones I've sent out. Here's Deswell. This is one I took. Bought on the surge out. Look at the breakout. Boom. Goes from 390 to 525 in 17 days. IDXX, another one we took here in Stealth Trades. Oh, there it is. Look at this setup. Once you learn this, you'll spot it with your eyes closed. Same tightening, nice and tight, volume drying into the breakout. Boom, we're buying right there. Stop loss right there. Not risking a lot of money. We're not rolling the dice with our kids' college fund. We're making a very calculated bet with a fantastic risk reward ratio, and it just grinds higher. These are all ones we gave live here in Stealth Trades. AMR, another one. Look at this. Set it twice in a row. I pointed this one out. Buy here in May. It makes a rapid move from 16 to 26, 60% in a month, and then it does it again. Tightening, tightening, tightening. Boom. Breakout. Gone. So let's look at some examples for this week. Okay, let's look at some stocks we like right now. This is all great and fun. But you're going, all right, well, give me something I can buy now. Now, for those of you here live in the Zoom room, you don't need to text anything. For those of you watching live via YouTube, we're making you guys an offer to join Stealth Trades, to join my group here in Zoom. Once again, just text Ross, ROSS, to 74121. What they'll do is it'll just send you a link to sign up. It's $5. Scroll down to the bottom, put your information in. You can join us every single Monday, as well as get live trades delivered to you. All right. Dave asked, what's the candle call with a little spike on top? Like you talking about like an exhaustion candle? You have to give me a stock to know what you're talking about, Dave. All right, so let's look at the 3 stocks looking at this week. Now, a couple of weeks ago, the last few weeks, I kept giving these. I'd write them up Friday morning, and come Monday, the stock started taking off. People were like, Ross, you're killing me. They're running too fast. We're not catching them. Well, this week it went the opposite because the indexes are blood red today. But they all went down from where I was looking at them, so they haven't triggered yet. So these are still active buys when they hit our level, not before, not a few days after, when they hit that number. So this is Dollar General. Now, Dollar General has been a pretty good 2022. It's holding up near its highs. Now, other than this big little wipeout session down here, you see the kind of tightening pattern is looking really good. I thought if we break out above, now it's pulled back today and Friday. This is okay. Doesn't mean we don't own it. We don't buy it yet. Maybe it pulls back and gives us another tightening. It could tighten up for a month and a half. I'm not going to buy it until it breaks through. But DG, if it can turn around, by the way, they've got earnings in 3 days. So their earnings are going to be Thursday morning before the open. So you're going to wait till after that. But here's where we're looking to buy DG on a move above $260 a share. And again, this was not here. This bar is not here when I made this on Friday. But where would your stop loss be? Right down here, right? The last swing low. This is how much we'd want to risk. If those of you who are brand new, a stop loss simply means a sell stop order. So you buy, let's say you bought 1 share here at $250. You immediately go in your brokerage account, you place a sell order. It's going to have market, limit, or stop. Put stop. You'd put in your stop price is $239.20. And you'd make it GTC, which stands for good till canceled. So it's going to stay there as long as you're in the position. And what that tells your broker is if this stock hits $239.20 for any reason, anytime, sell it immediately. And so that gives us a risk of 7.3% on this trade. Okay. That's Dollar General, ticker symbol DG. Let's look at another one. RGP, so this is Resources Connection, a personnel company. Now, this is a really strong group in the market right now. I won't bore you too much with market groups and sentiment and all that, but just take a quick look at this. This is something from MarketSmith. Look up here in the top left corner of your screen. See there below the ticker, it says Commercial Services Consulting, 13 out of 197. What MarketSmith does is take all the groups in the market and breaks them down. So like instead of having 15 or 20 sectors, it breaks all stocks down to 197 different industry groups, and it ranks them in terms of relative strength. And you can see this ranking. And here on the bottom, what's the strongest right now? Solar energy, biotechs, mini markets, alternative energy, fiber optics, telecom, that kind of thing. But, the group rank, in this case, the case of the stock, is 13 out of 197. So that means in the top 10%, really the top like 6% of market groups. So if we get a strong stock and a strong group, that's that much more conviction for me, because you'll find as you do this for a while that stocks tend to move in packs. So like what we saw at the beginning of this year was all the oil stocks and the fertilizer stocks and the marine shipping stocks all surging higher. Now I've seen them all come lower. When one social media stock reports bad earnings, all the social media stocks come down. So they tend to move in groups. So if you can get a good stock like this, stage 2 is a good setup in a strong group that is outperforming the market, you're again increasing your odds of success. So RGP is one of those. I know I got a lot of lines on this chart. This one I was watching back here. But it didn't get quite tight enough for me. See how this last pullback? This last little pullback was like 13%. So I didn't buy it here because I want it nice and tight. It actually ran up, and now it's tightening a little bit better. Pull this line off the chart so we're not confusing anybody. I'm just kind of drawing this to show you the wedge action there. This one looks a little better. See, we're shallowing and shallowing, and I'm expecting it to kind of do something like this. And then we want to buy it when it gets above this line. So RGP on our buy list, once again, as long as it's below $22, As long as it's below our trigger price, we're not touching the stock. Only if and when the stock gets above our buy level are we looking to buy. John, is the trigger for RGP 44? No, did I say 44? It should be 22. Let me check what I sent you guys last week, or what I sent you on Monday. I write these up. By the way, I write these up for members, and they go into they go out either on Friday or Monday. So I want to see what exact numbers I put in that one. It has it in front of them. Take a look. Let's see. So here was the watch list. Let's see, RGP. Oh, it's a typo. My bad, guys. That should be 22. Yeah, thanks for that. Thanks for pointing it out. See, I make mistakes. That's my bad. Should have been 22. I'll hammer my editor for not looking at that one. Yeah, $22 our point is our buy point. And where's your stop? Well, if this is the low and it comes up here and breaks out, where's your stop loss? Right there. That's all you got to risk. The place you buy, stop, you're risking 6%, 5.5%. Remember, low risk entries. Stock's already in stage 2. We want everything. Folks, people look and go, is Facebook a buy here? What about Amazon? I wish I do with this. I don't know. I don't care. I don't look at those stocks. And people think they have to have an opinion on everything. You got to know where Facebook's going. You got to know what's going on with Google and Amazon and Apple. I don't watch any of those stocks. I don't care. I don't need to care. There's 6,000 publicly traded companies. I'm looking for 5 or 10 to buy. I only want the absolute best. I want big earnings growth, big sales growth, big stage 2 uptrend, nice tight entry point. I'm not trying to get every stock that moves. I'm trying to find the ones at the lowest risk, highest reward entry point. And I'm just getting in, getting out. That's it. That's rarely Facebook or Google or Amazon, one of the others. DQ is another one that's breaking down here. Broke down on Friday. It was looking good. It was looking nice, tightening, and to tighten here. I thought we'd kind of pull up, and it's now breaking down here. So we need to wait on DQ. My guess is if this thing remains a bit bullish, just try to draw the chart out where you think it could go. It's gone up. It's pulled back to here. We want to see it hold above here, right? We don't want to see it get back into that level. What I'm expecting is pull back in here. That's going to be a little wide, so we get one more tightening. Then we buy that breakout, put our stop loss right there. Okay. I put these together usually. This one I did Thursday night, no later than Friday morning, and give it to my guys that they can get this up and on the website and to email to all of you and still get home and see their kids. So sometimes they move a little bit between then. I look at some others like here, CJ, we're looking at MUSA. We did last week. ITCI, so never really hit. Zine broke out. It's run too big so far. Yes, OTTR, and then we had on the list. This one did really nicely. KNSL, see how this one broke out. These are the previous ones I've added the weeks before. Yeah, KNSL did as a couple weeks ago. Buy point was 245. Pretty easy to see, right? Ions, this one, boom, tight. Buy point, stop loss, quick pop. Quick pop. Buy, got 15% in 3-4 trading days. CWCO. This one didn't play out perfectly. It pulled back a little, but you're still up pretty nicely on it. MCK. Those of you who have been in stealth trades for a while, this is our official trade. We sent out the official trade alert right here. Text, email, everything. Bought at 337. Why? Stage 2, move, tightening, bam. We bought. It's pushed higher. We're about 10% in running. We've taken profits on half. Our stops at break even. Worst case scenario. Worst case that can happen to us now if we make 5% on this trade. So we financed our risk, we raised our stop, and we're just riding this one out now. Questions? Yeah, it could be a doji. That might be what you're referring to. Thanks, sir. Okay, Aman, you asked a couple of times stocks here. Let's see. BMY, one you're looking at, Bristol Myers. I actually like Bristol Myers. I think you've got a cheat entry setting up. And this is a bit more advanced, but we'll go ahead and cover this one now. Typically want to see it kind of tighten, and then it went loose, fake breakout, kind of all over the place. But you see how we're getting resistance now right in here, how it's forming that little pivot area. So this is an advanced topic. So if you're new to this, don't just ignore everything I'm saying here, but it'll kind of tighten, and then you'll often get these little micro pivots inside here where you can buy, and then hopefully what you didn't expect is the stock to come up to previous highs and really complete the pattern, and then you can add on up here. But yes, I think you could take an early stab here at 75-ish, put a stop right down here. You're only risking 3%. And you could even put it all the way down here to low. You're only risking 5.5%. I got a lot of crap on the chart. Forgive me. But I think that's, again, I shouldn't talk about it because it's not quite 100% on the rules, but I will sometimes take these sort of cheat entries with a smaller position just because you've got such clear resistance right in here for the last, call it 6 weeks or so. And you've got this nice wedging as the stock is tightening up here. We've got volume declining as we get into this tightening, which is what I want to see. So I think, yeah, it's a good spot on BMY. The other stock you mentioned, Amon, was Airbnb. Now, I wouldn't buy this stock. Why wouldn't I buy this stock? Apply the lessons. What stage is the stock in? Who can tell me? Yep, Cheryl's in stage 4, Mac below the 200, 4. Yeah. Maybe you can make an argument that it's going back into stage 1 and going sideways, but I can tell you where it's not. It's not in stage 2. What do I need to see for stage 2? I need to see the 200-day going up for at least a month. I need to see the 50-day. I need to see the 50-day above the 200. And I need to see the stock price above that. What do I have here? I've got the 200-day pointing down. I got the 50-day below that. I got the stock in between them. I have no tightening pad. There's nothing about this that made me buy it. Now, if you asked about the stock, I'm not beating you up. And I'm not even saying the stock is definitely going down. What I'm telling you is I don't have a high probability of the stock going higher. I want a good stock and it's a good group. I want to be in a stage 2 uptrend. I want to form that stealth pattern where it gets tighter and tighter and tighter so I can risk very little. I want to be breaking out so I've got the greatest chance the stock is going to rise immediately. I want all those things, and I have pretty much none of them with this. So it's a bad stock, it's a terrible company. I mean, I don't like it, but whatever. We're just not going to buy it. Again, there's 6,000 companies. You can throw 5,995 of them away if you find 5 good ones. That's all you got to do. All we got to do. All right, what else? SP, looking at LAC. Is that Lithium Americas? Okay. This stock trying to come together. I had some old notes on here. Let me delete these. This stock trying to come together. It's trying to get there. It's not stage 2 yet. It's had a big run up. Okay, it's come off its low here in July. It was at 65% in a month. That's really strong. 65% in a month. There's nothing to shake a stick at. But when it happens, you just made a big move up. You're just very susceptible to correcting and doing this. Which is why we wait till they've done this and they get really tight, then it's not there. So it's reclaimed as 200-day. It's now trying to fight to hold this 200-day moving average. But the 50 is down here. And the 200 just barely started to trend upward. So I think this thing needs work. And by needs work, I just mean if this stock just did, if it just did this, if it just, it's been a couple of days, came up, down, tightened up just a little bit, give it a few weeks of that. The 50-day would be up here. The 200-day would be clearly trending upward. The stock would be above it. We'd have a resistance at this level, and you'd have a breakout trade from a brand new stage 2 uptrend. I'd be all over it. Now you might be thinking, well, Ross, what if it runs me? I'm going to miss it. Yeah. You don't have to catch them all. I don't catch them all. If you're just so in love with a stock, you absolutely have to buy it and throw the rules out the window and just buy it. But for you to have that feeling, you better know something about this company. You better work there, have inside information, have solid statistical reason to say that Lithium America is going to be one of the best leading stocks for the next 5 years. I've got to own it. I feel that sure about it. If that's the case, just buy it and just buy the pullbacks. But if you don't have that, and I don't have that about any single company, there's no stock I feel like comfortable about, then wait for the right 7. I don't think you're quite there in LAC. Let's look at GIS. There we go. We're talking. Who did this one? Rebecca. I might give you a gold star today. This is beautiful. General Mills looks great. We've got several things going for it. First of all, let me just show you the fundamentals. If you don't care, look down here at the bottom of the screen. Look at it. We're getting sales and earnings growth is increasing. We're in a decent group. Packaged food, 37 out of 197. Very good. So it's a healthy group, good, decent fundamentals showing some growth. More importantly, we're in a stage 2 uptrend. When do we enter stage 2? With this stock, I would call it right. Whoops. Let me see. Nope. All right. Measure. How about here? About there is where the stock became stage 2. Why? Well, 50 days pointing up, 50 days above that, stock above that, everything being met. Now I just need at least 30% off the lows. All right. So I just go find the low of the year, just down here, and I measure. And I want to see it go up 30%. That level was hit right there. So at this point, now I'm in stage 2. Now I'm looking for a setup. I'm looking for a low risk entry. And I think Rebecca's found one. It's not, I mean, the level is kind of like this, but you can still see it. Look at the pullback. Look at the shallowing. 12%, 6%. Look at this last one. Just tight little area. Beautiful little tight pivot area right in there. One, two, three, four, five. 2 weeks of trading, and the stock's been in a 2.5% range. That's what we want to see. These are a little tougher because they kind of wedge higher like that. So you just got to wait till it kind of shallows. But I would buy this on a new high. I'd buy it if it breaks out. Market's getting eviscerated today. This thing's only down 0.5%. They got eviscerated Friday. It was actually up. So the last 2 days have been terrible for the market, and this stock is not down at all. It's a great sign. So I'd be looking to buy this on a break. Even more important, where's your stop loss? Right there. What are we risking? 2.4%. Almost nothing. Great pick, Rebecca. Good job. So by the way, for those of you who are on YouTube, listen, and those of you in Zoom, by the way, if you go to YouTube, search Traders Agency, find our channel, do me a favor, like this and hit subscribe. The reason I tell you to do that, we're going to start doing these live sessions on a regular basis, probably at least once a week. If you subscribe to our channel, you'll be notified when a live session is coming. So all you do is click the link and you can come join. Now, it might be Josh on there. You think, man, this Josh guy, he's not very attractive. I want to look at Ross instead. I'm just going to close this and come back. That's fine. That's fine. Joking, obviously. But subscribe to the channel. You'll get updated when we go live. You won't miss anything in the future. And those of you who are in the YouTube room or watching this recording, we've got an offer up for you to join Stealth Trades for just $5. All you got to do is text Ross, text ROSS to 74121. Just text Ross to 74121. We'll text you the link to sign up there. Be the best $5 you ever spent. I guarantee it. All right. What other questions we got? Charles said you pulled half out of stem was the right thing to do. Yeah. Good for you, Charles. Let's see. We were looking at this thing last week, weren't we? And you're up big. Didn't you buy it down here at like 7 or 8 or something crazy? We were looking at it the 15th on this Monday right here. I think, if I'm messing this, forgive me. I think you were talking about this stock. I said it's pretty extended. I'd take some profits, and sound like you did, which is great. All right, a couple more stocks people asking about to look at. Let's see. LWLG, is that Lightwave Logic? Yep, sure is. LWLG. All right, this one not ready. It's trying. You're on the right path. It's early. The 200-day is not yet turned up. I actually traded this one a while back. I think we traded it. It was a recommendation. I mean, there's just so many good setups in this one. And look at this stock. It's like picture perfect. You had one right here. You see the stock just came and shallowed and tight. It wasn't super tight, but again, it's a cheap stock. So 40 cents on $1.80 is a large percentage. It blasts off and then just compressed up almost perfectly again. By the way, don't be too much of a stickler if these lines going, oh, that top's at 15, that's at 14. It's not a perfect science. You just want the general structure. You want to see it doing this and tightening, and that did it just beautifully. And you buy here on a breakout and just blast from 15 to 20 in like 2 days. That ended up being the end of the road, however, and it quickly rolled over and shot down. So, I mean, what would I have done with this? How would I have traded it? The same way we always do. We sell into strength. You get up a good chunk. You take half off. You raise your stop to break even, and it have flipped over. It would have stopped you out right here. You made a good chunk on half. You made nothing on the other half. Small win. Small win on a stock that after you sold it, dropped 50% the next month. Do you see how followed is? Even when we get to the end of the road, I mean, the worst possible time, we're still not losing money in these breakdowns. We're still not getting caught up in this downtrend because we know it shouldn't be there. If you, like I say, if you know the truth so well, you'll I forget the exact phrasing, but something like, we know the truth so well that the lie seems like a sore thumb. If you know what a proper structure and a good breakout looks like so well, you'll identify when it doesn't look good. So I see what you're seeing. You're going, all right, well, I'm just trying to do this, the tightening. Yeah, it looks like it. But we're not stage 2 yet. 50 days down here, 200 days still flat. Need to see this one coming up, this above that. We are 30% off the lows. I just think it's a little early. A little early on LWLG. Cheryl, ESTE. Earthstone Energy. I'm not crazy about this one, to be honest with you. It just doesn't look right to me. I mean, a big, strong run. And as soon as, the exact same order, same speed, it came right back down and just returned to this choppiness. There's no big volume on the moves. I mean, there's not much institutional activity there. What are the, what's the size of this company? 2 billion. That's decent enough. It's a mid cap. I don't know. If it weren't for this, I'd say, yeah, you're in a giant base here. Let it, maybe if it compresses, it still might be worth a shot, but I don't see any big green volume days. I don't see any big accumulation for the most part, other than like one right in here. It was quickly shut down. See a couple of big selling days. I don't want to beat it up. It doesn't look bad. It just doesn't look good, if that makes sense. I don't really see anything I'm crazy about. Okay, Charles, you made 89% on STEM. Fantastic job, Charles. Well done, man. You should pat yourself on the back, take the profits, take your significant other to dinner, enjoy yourself. All right, any other stocks we want to look at? Oh, Georgie says Cineworld. Yeah, this is the reason that AMC is getting hammered. This company filed bankruptcy. Remember, we just talked about how stocks move in groups. First of all, where was the buy point on CINE? Where should you have bought this stock? Pop quiz time. Anybody? No answer. There is no buy point. Trick question. Nowhere to buy this stock because it's in a downtrend the entire time. The 200 days rolled over. When the 200 days finally up, the 50 is going down. The stocks, only in here did briefly get above the 200, but the averages weren't stacked. Remember, we need to see it look like this. Stock chart up top. We need the 50-day moving average below that. We need the 100-day, 200-day, excuse me, below that. Stock chart, 50-day. And these are on any charting platform. Just get a moving average, 50 days. None of this is proprietary indicator. Nothing's anything you need to pay any money for. All this stuff's free online or any platform you've got. So if you're feeling overwhelmed, don't. We need that order. We need a stock. Well, the 50, well, the 2. It never got there. This thing has been an absolute dog taken out of the woodshed. It went from $125 all the way down to 2. Even was at 19. I mean, it's a piece of crap. There's nothing good about it. There's nowhere in this chart that you've bought this dog crap stock. AMC, what do you know? Getting murdered because someone else in their line of work went bankrupt. And so the stock falls 42% today. What did AMC do? What is different about AMC than yesterday? Absolutely nothing. Nothing has changed. They didn't report earnings. They didn't fire the CEO. Nothing has happened. But stocks move in groups. And this one's moving down because Cineworld went down. Where was the time to buy AMC here? Nowhere in this chart. But y'all want to get your mind blown? Watch this. What do you think of that setup? Go back even further for you. Whoops, it's 2018. Look at this in there. May not have been perfect. It was pretty darn close. See the pattern? Big run up, 1,000%, comes down 70%. Not played in this sandbox. But if you were willing to make the risk, if this is comfortable to you, look at what it finally did. I mean, after it went from $1.80 to 20, see it? Buy point. Get good volume on the breakout. Textbook. Now the risk was a little more than, I mean, it's a meme stock. So the risk was more than one a risk. You would have bought it at 1480. Your stop would have been at 1180. You'd have risked like 20%. So I'd have probably just used 10% right there in the middle. Well, look what happened. I guarantee you had not heard about AMC. It was not making the big crazy run in May. This is $15 a share. You would have bought it to 72 in 400% in 8 days. In worst case, you risk 20. That was the setup. So even in a crazy meme stock going nuts, we're waiting for the same exact pattern, the same thing. I thought it could set up here. It started to. Tightening, 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 right? So we didn't need to see like a breakout to this level or maybe through this up here, but we never got it. So I didn't buy it. And that's okay. You don't have to catch every single one. And it's a good thing you didn't buy it. By being, disciplined, you stayed out of this piece of crap. People got caught up in the crazies and bought it back here a week ago. Imagine buying a stock on Monday, and the next Monday you're down 58%. That's not a good feeling, folks. No need to do that. ADP asking about McKesson, MCK. Yep, this one looking great. This is a stock we bought here in Stealth Trades. I recommended to everybody. We talked about this one earlier. Nice breakout from 337. You can see I've got a note set in here. If it comes back, stop out on the second half of our official trade. Bought at 725 at 336. Took profits on half. Raise your top to break even. This is how I keep track. Set an alert. If it hits it, it pings it to my phone. All right, look at a couple others, then we'll go ahead and go. I know we're over time. Georgie asked about INST. Recent IPO. Intel started trading back here. I don't like it. I think it needs work. Shelf offering of 800 and 120 million shares, he says. Downloaded prospect. I don't know. I don't know anything about this company. Volume's pretty light, but again, I would need to see some tightening and signs of accumulation to be interested in this one. Someone's asking ENVX. I mean, that's just too wild for me. It's, again, if y'all, I have a saying is buy tight, sell loose. That means is I want to get the stock nice and tight. I want to buy. And then I sell when it gets really loose. So if it, comes up and makes big moves like this, like if I'd bought it, this isn't a good setup. Let's just pretend it was. Let's pretend it was a good setup. And I bought right here when the price was getting very tight. Well, then when it blasts up here and starts gyrating, getting loose and wild, I'd be selling into this. So, I mean, this is a stock that has fallen 29% in 1, 2, 3, 4 trading days. That's just not something that's going to be on my radar. So I'll be perfectly honest. I have no idea what the stock's going to do. It's not in my wheelhouse. I don't feel like I have an edge in it, so I'm gonna avoid it. In phase, Cheryl's asking, is this one all done? I don't think so, Cheryl. I think this has got all the signs of market leading stock. This could be a $600, $700, $800 stock a year or two from now. I'm not guaranteeing that. I'm not saying buy it blindly, don't use stop loss. Hear me clearly. This is one we recommended, both in here in my Alpha Stock service, where it tightened. We bought it right here, and the stock exploded, went up 40% in about 3 weeks. Now you see I've drawn a bit of a channel in here. I'm kind of watching the stock for the retracements. What I'd like to see is for just to tighten up again, this pullback in the market allows the stock to catch its breath, tighten up, form a new pivot level. And believe me, if that happens and it breaks out again, yeah, I'm throwing money at this thing. I'm buying it because it's shown me it's a market leading stock. Big volume accumulation, big huge breakout volume here. Everything looks good. Super high relative strength, great earnings. It's in the #1 ranked industry group in the market right now. It's the #1 stock in that group. They make a lot of the components for solar panels or some kind of, what do they make? Some piece that's in like all the technology. So yeah, I don't think it's over. Would I buy it here? No. I don't have a low risk entry point, but I think it's got more to go. I do. All right. Well, listen, I want to go ahead and end the session here. We've got about 15 minutes over. Those of you, my Stealth Trades members, thank you for being here and joining me on Zoom. Come back next Monday. We'll go over 3 new trades for the week. We'll look at all your ideas, and I will beat this stuff into your head some more, guys. All right. We'll make you all stock traders, so help me. For those of you on YouTube, thank you for joining us. Whether you're watching this live or you're watching the recording, we appreciate you being here. Once again, be sure to click the like button on this video and subscribe to Traders Agency. It's the only way you're going to get notified every single time we do a live event. These cost nothing for you. And by the way, if you're interested in joining Stealth Trades, just text us. Just text Ross to 74121. Text Ross 74121. You get an automated message back saying click this link to sign up. It's $5. I'll teach you everything you need to know about how to trade stocks. I'll share my top 3 ideas with you each week. We'll do live sessions. We'll give you live trades every month. I can't make it any cheaper and fairer. So I hope you join us to become a Stealth Trades member. So thank you all. See you next time.